Doug, this is a big day for you. The stock is already down 9%. We haven't seen a decline like this in 17 years. Wall Street's watching. Why should they own Walmart stock?
Well, we're here today and had a nice meeting with our analyst community to talk about the future of the company, a nice long meeting. And what we're talking about is how we transform the company, Stephanie. And we're making some investments in people and in technology. And what the market reacted to today was some news that frankly has been in the market. We started this year to announce some wage investments, and they're big numbers. We raised our starting wage rate this year to $9 here in the U.S. in our stores and clubs, and next year we're going to $10. And that's a big pressure point for us next year on top of an e-commerce investment. But what we did today was to describe how we're going to win in the future, how we win by bringing it all together.
But 3 years, if I'm somebody who invests in Walmart today, why do I want to do something that's going to take 3 years to get paid, to really get a payoff?
Well, next year in particular is where the pressure point is, and then we start to improve earnings where we go from there. But the bottom line is we've got to get this company positioned to serve customers in the longer term. We're building a technology company within Walmart. We're creating a digital company in addition to the stores that we have. And with the investments we're making at store level, on top of that, it creates some short-term pressure.
Were you surprised at the reaction of the street?
Not entirely, but it is interesting to point out that the $10 wage investment, which next year is $1.5 billion, this year we put a little over $1 billion into our stores, was public knowledge, and we'd already said it. So one question would be, was the math in the multiple, and I guess time will tell. But it was information that was out there.
How much of that investment in employees do you expect to come back to Walmart in terms of larger sales, and at what point?
Yeah,
How long do you have to wait?
strategy is to win with customers, and our clean, fast, friendly scores in our U.S. stores have gone from being 17% favorable or acceptable in February of this year to 67% now. So the investments we're making, our customers are already seeing the benefit, and by running great stores, you can then set the stage for price investments and other things as we look forward into the future to create the Walmart that is at its best. And that combined with digital, things like grocery home shopping and what we're doing with e-commerce, put us in a position to win.
If next year is the year when it's the real pressure point, why would I buy your stock today? Why wouldn't I wait, see how you do in this improvement plan, and buy a year
Part of what we announced today is a $20 billion share repurchase program, and it's authorized, and it's our intent to invest that in the next couple of years. So we believe in our stock price, and you see it because we're putting our money where our mouth is.
So Walmart is a bellwether for the economy more generally, not just in the United States, but around the world. As you look forward into next year, where do you see both growth potential and where do you see some challenges?
Yeah, what we shared today is that we're really focused on the United States, North America, and China in particular. So there's going to be a lot of growth coming out of those two markets. The investments that we're making help us be able to serve customers in a way that we can take advantage of that growth. I think the U.S. market next year is going to be at least as good as it is this year.
But your margins are so small. Are you going to rethink, is this the right strategy? When you look at other stores that are saying, we want to be low cost, but aspirational and have higher end products, that hasn't been your mantra. Do you want to change your strategy?
We are in a people business. Our associates do the work, and they deserve this increase. And what they're going to do and already doing is to show that to our customers and create a better customer experience in our stores, which ultimately is what matters.
We're also fastened on China, and you mentioned China. What are you seeing in your data? I mean, you actually have insight into real data, real time. Are you seeing consumer spending hold up in China, or are you seeing it
There's some pressure there, but there's not a complete tether to what you read in the news and what you see in the stock market in China. We have super centers in China. We're growing share. Our Sam's Clubs in China are doing great, and we bought the rest of an e-commerce business based in Shanghai earlier this year. So now we've set the stage in China, as we have here in the U.S., to win by creating a seamless shopping experience for customers. They're going to be able to order on their mobile device, have it delivered, pick it up in a store, depending on the circumstance in the market, so that they can save time as well as money. And that's going to happen in China as well as it's happening here.
So to be clear, your stock drop today, would you attribute that to your cost structure and the changes you're making in the company? Or we also look to Walmart to understand the U.S. consumer. Is the U.S. consumer shopping less, hurting more?
I think this is more about the company than it is the market, and it's a question of short-term versus long-term. And what we're saying is we believe in this business for the long term. We're going to do what's necessary to put Walmart in a position to win. We've got some great assets. We have a terrific supply chain. We've got all these distribution points in our stores. And when you put those together with the digital capabilities that we're building, we have a winning strategy. The alternative would be to not invest, just keep running the business the way we've been running it, and then eventually, years ahead of time, because Walmart's so big and has some momentum, it'd take forever for the business to be in jeopardy, probably literally forever. But now if you grab grab the steering wheel and you do what's necessary to position for the customer, we set ourselves up for a stronger position in not too distant future.
Part of your investment is in e-commerce.
Yes.
So, I mean, without using the A word, how do you think you're going to compete with that?
Part of it is about leveraging the stores. I mean, we've built out distribution centers. Several of them opened this year, which was another investment, to create each fulfillment. And as we put that together with our other distribution centers in our stores, we can allow a customer to order online and have it delivered to their house if it's not a food item. Order online, pick it up in a store on the parking lot over time. We've got a great test going on here in this country, as we have had in the UK for a few years, where you can pick it up in the parking lot and not go in the store, or you can choose to go in the store. It's really about blending the channels together. The customer won't have to think about, how did I order it or choose to buy it? It's just there, we're everywhere. Or how do I want to pick it up or take delivery of it? It will be able to serve them in multiple ways.
Do you need to rebrand yourself for us to really think of you as a technology company and have a big marketing spend? Because when I think, where's my one-stop shop online, I default to Amazon. Not because I prefer it to Walmart, it's just not how the consumer thinks.
Partially, we had to put all the capabilities in place. So we had to build the digital platform. We had to create the fulfillment centers. We had to earn that. We're now getting closer to that point. We've now got the third most visited mobile app in retail in the country, and we've been known for a long time for price and assortment. Now we just have to deliver that in a different way. So we probably will make some investment to communicate that message, and we've already started to do a little bit of that. But we wanted to make sure we had the right customer experience in place before we started telling everybody about it. And it's like we said with the analysts today, as it relates to our investment in people in our stores, you clean up your house before you invite people over, and that's what we've done.
So let's talk specifics just for a moment. I think what I read, at least, on Bloomberg News, was that the projections for profits next year went from a 6 to 12% range down to 4, which is, I think, precipitating the stock price. Now, if you took out your investments, your e-commerce and your people, apples to apples, where would you be?
75% of next year's investment that's on top of the cost we have in our business is related to people. So it's about $1.5 billion as our associates enjoy an increase to $10 as a minimum starting wage rate. And we've added department managers and done some other things to invest in people. That adds up to 75% of the pressure. The rest of it is in e-commerce, and some of it is in a price investment that we intend to make next year.
Do you know who your customer is? We're seeing you make a bigger push into organic groceries, try to go for a more diverse product line. When your consumer is looking for the lowest cost items, it's Walmart employees, many who in the past have been on food
Don't pigeonhole our
stamps.
customers. I showed a chart today, and we had the U.S. by income level and our customer by income level. And when you get a chance, go back and look at it.
Then do you
it
have a
matches
branding
the
problem?
United States.
If I don't know your customer, does the world?
You live
the world
here.
know?
Not everybody lives in New York City, and people know and love Walmart, and we've got customers from all income levels. Now, will they like the e-commerce investment? Yes. Will they like the services we're building for them? Yes.
Will shareholders?
More income.
Customers might like it, but you need shareholders to like it this week, tomorrow,
Not just this week. We need shareholders to like it over time. And if you don't win with customers and associates, our employees, you don't win with shareholders. So for me, this is really clear. I am excited and committed to what we're doing, as you would guess. And so is our management team, and our associates are buying in. We're absolutely doing the right thing. It's just going to take a bit of time.